Greetings, members, one and all of the Salivation Nation. The perfect storm for silver. Let's explore. You know, one thing I do like about some of these infographics is the way information is presented. But sometimes you have to question some of the sources or how they put it together. You know, they take the time to make these great infographics and they look great, but to do the research behind the data and presenting it is something else that sometimes can be a bit to be desired. We have to take that into consideration. But let's explore this second part in the series for a new gold-silver cycle, silver setting up for a perfect storm from Visual Capitalist. The first part is the new gold-silver cycle. I may have covered this before, but I think this has some very interesting information. We'll kind of go through this relatively quickly before we get into the next slide, because I think there needs to be a preface to what we're going to talk about with the second part in the series. You know, and the bankers blowing bubbles, we've seen a lot of quantitative easing, and these charts tell the tale of the tape here with the Fed balance sheet growing, with the S&P 500 and how that is done. Stock markets, consuming lending, and property values had surged leading up to 2008. A lot of debt that has been created. If you look at the global debt coming up through 2018, we can see that the government's debts have ballooned and financial corporation debts have increased. But really, if you take into consideration what they have been over the last 10 years, they've not increased that much more. But non-financial corporates have, and household debt has steadily gone up as well. And then a massive increase of the supply of money erodes everyone's purchasing power, while ballooning debt creates systemic risk. And this is where we see the statement here: gold and silver are money, everything else is credit. Actually, JP Morgan didn't say it that exactly. It said gold is money. They're trying to lump silver in there as well. I believe silver is money too, but let's get the quote correct here. Then we have currency versus precious metals. Talk about how all major currencies have depreciated relative to gold. And that is true. The inflation erodes the purchasing power of every dollar, essentially devaluing currencies to the point where they disappear. You know, gold is this constant at 100%. You know, this is relatively a simplified version of it. Here it says silver is a poor man's gold and closely follows the performance of gold, but that's not really true either, especially these days. But by and large, the metals, even gold too, this should be going up and down because it's the consumer sentiment. It's the sentiment of the market that doesn't necessarily keep gold at a constant rate. You know, I mean, gold was $1,200 not too long ago, and was also $1,900 not too long ago as well. It's the where the value of that is. But by and large, this graph, even though not completely accurate, does show that other currencies do end up following and failing in due course. Gold and silver preserve their values over time relative to currencies, yet the current prices of gold and silver do not reflect the reality of cheap and abundant money. It's only a matter of time, gold and silver to shine. But when? With the perfect storm for a gold-silver cycle, and the gold and silver futures contracts, most traders do not trade physical gold or silver, but paper contracts written with the promise to buy at a future price. And we can see in this graph it talks about that. And you get into commercial traders, non-commercial traders, large speculators, and then small speculators, and how that all plays out. And then some of these patterns that they talk about. For the first time since 2016, speculators went short and commercial went long, potentially signaling the start of a new cycle. And then you see the gold-silver ratio compression. The gold-to-silver ratio is the amount of silver it takes to buy 1 ounce of gold. And so you can see the gold-to-silver ratio compression. And here, when the gold-to-silver ratio compresses, the price of gold and silver can move dramatically. For example, silver went from $1.89 in November 1972 to $36.13 in February 1980, an increase of 1,111%, while the gold to silver ratio was on a downtrend. And and so you can see that, but here you can see that it's really widening and it's on a steady increase upwards. Aside from this one period of time here in 2016, we saw a little bit of a squeeze here. The difference between gold and silver prices falls, the compression of the ratio. History suggests silver prices can make big moves upwards in price, and that is what history does suggest, but the future performance does not necessarily mean that it's an indicator of future events, especially with what I talked about in a prior video. I think especially since 2011, and here we see some of these areas of recessions and the like, we have started to see silver being viewed for all of its uses as a commodity just as much, if not even more so, as money. More on that later in the next chart here. Declining silver production. This is a little controversial. Total global mining supply decreased from 1,050 million ounces in 2014 to approximately 950 million ounces in 2019. And that's estimated from the Thomson Reuters and the Silver Institute. I don't really question that, but it may be because of the demand, the lack of demand, and it could be how they're doing this, with these figures from primary silver mining to secondary. How are they tracking those ounces in production? I'm not sure. If they're capturing all of that, maybe they are. Despite the growing importance as a safe haven hedge, and due to its industrial applications and renewable technology, silver production has been declining. I disagree with the first part of that. Its actually importance as a safe haven hedge has been decreasing. And I think that's part of the reason people are seeing it as a commodity, as an industrial metal for its uses. And silver production has been declining, and because there's not been as much demand for it in that sector. There's been more demand for it for electronics, but that means it's acting and reacting as a commodity. So the silver exception is not just precious but useful, and this is where we're talking about. Look at the use, look at all that global silver demand in all these different industries. Electronics 24%, photovoltaics 7.7%, brazing, alloys and solders, photography, ethylene oxide. So you got all of these together here, and look where coins and bars are, 17.5%. And there that is. Global renewable capacity and price of gold and silver. We can see the comparison here. And the price of gold and silver do not reflect a world with cheap and easy money, but the time to shine is here. So that leads us to the next in the series. So that gave us a little background, the new gold silver cycle for the setting up a perfect storm here. In addition to the investment thesis as for silver as a monetary metal, silver is also special for its industrial uses. Silver is produced primarily as a byproduct of non-precious metals mining. That's important here. I think that is paramount, that it is produced right now. It is produced primarily as a byproduct of non-precious metals mining. With base metals currently in a bear market, there's a dwindling supply of silver. Boom, there it is. And why is that? Because of partially because of what we're seeing even more recently here. There's not as much production, not as much mining, means there's not as much demand for some of these products, and because of certain situations. There's less silver being produced. That means it's not going to be out there because there's not as much demand for it. Doesn't mean it won't return, though, in due course. So in other words, I think what they're alluding to here is that there's a dwindling supply of silver, not because it's not there in the ground and not available, but because of the other factors, economic factors. It's a green metal which supports rising industrial demand. This is placing an upwards pressure on the price of silver, indicating the start of a new gold-silver cycle. Well, that goes back to my argument before, that if we start to see a booming economy, let's say that after this thing with this particular ailment derived from Mexican beer, If this particular thing subsides and everything calms down, the markets start to go up again, you see increased production, yeah, we could see the price of silver go up because of an increased demand, but it'll be going up because of it as a commodity as opposed to a a hedge. And that is another way that the gold to silver ratio could narrow. Investment demand. Silver is a precious metal. Just like gold, silver has functioned as money for centuries, thousands of years, and its role as a store of value and hedge against monetary inflation is growing. I disagree with that. That's the new thinking for silver. Its role as a store of value and hedge is not growing. Currency debasement is not new. Governments throughout history have printed money, and silver's value grows relative to those paper assets. Until we see more people stacking physical silver for the reasons you and I have, its role in store of value as a hedge of inflation is shrinking. That will continue to happen. It will continue to shrink as more people abandon silver as a hedge and seeing it as such. Until more people stack eagles and coins such as this, until they stack more of this, they're not going to see that change anytime soon. It goes on to say that the average investor today does not own physical silver. There you go, case in point. Rather, they invest in financial instruments that track the performance of the physical commodity itself, such as silver exchange traded funds. And that is a generic way to hold shares in silver that does not matter. An ETF doesn't care if silver's money or not. An ETF does not care if silver is seen as a commodity or as a hedge or as a safe haven. It's just an electronic representation of the metal that can really never be tested, because when you cash those out, you're not getting silver bars for it, you're getting money back. I think that's crucially important. Silver ounces and ETFs by country. We can see the total amount of representation here. This is quite telling. Silver ETFs represent 742.7 million ounces as of December of last year. The amount of financial instruments has ballooned across many financial markets. Look at that. Especially in 2019, they've gone up incredibly so much in the United States, the United Kingdom, and in Germany. And they've flatlined in Australia. Switzerland, they've flatlined. In Canada, they've flatlined. It's the U.S., U.K., and Germany that have really propelled and towards the later half of 2019. That is quite telling. It's amazing they're able to track that. This is an interesting graph. I think that tells us something. And this may be probably the biggest example of manipulation, especially here. Look at that. That's crazy. But look, it happened back in 2011 as well. Could this be what props the price up? Who knows? We'll see here. It's from CPM Group as a source. Until recently, ETF investment has been relatively flat, but there has been a surge in the price of silver. Meanwhile, the demand for silver-backed financial products has increased. The demand for physical silver. If investors want to reclaim their silver, these funds will have to find silver ounces fast. No, they won't. Those markets are never tested. When you cash out an ETF, you're getting cash, or you're getting a digital representation of cash. So I don't agree with that at all, but it is telling to see these increases. And again, we saw that happen in 2011 as well. Industrial demand. Silver is not just an investment, but also a green metal with many industrial applications. This is true. Look at all the annual fabricated industrial demand. It's not as much as it was back in 2005 here, or 6. But look at photovoltaic is increasingly becoming a part of the demand here, and as well as imports, trends other countries, other uses, electronics, jewelry, photography, all kinds of different applications. Photography is obviously dwindling and being made up for in the PV arena here. And of course, jewelry and silverware is actually relatively level, but it's been increasing as of late. That's pretty fascinating. Silver is powering the green revolution. It's the best natural conductor of electricity and heat. Using electronics, battery, solar panels, alloys, RFID, LED semiconductors, electrical vehicles. an investment in the green revolution and demanding more and more silver. Where's the precious metal coming from? And here's the mine supply. Very interesting. Mexico has the most. I thought Peru was the most, but no, it's Mexico. That's a production mine in 2018 with 196.6 million ounces. First Majestic, probably the king. Mining companies there. Peru, China has an amazing amount. Pretty wild. United States is way down there. And Russia is a distant fourth there, with Chile not too far behind, and it goes back down. Dominican Republic, there you go, Chuck and Plata. They're producing 3.4 million ounces there, just from the Silver Institute. The bulk of silver production comes as a byproduct of other metal mines. That's right, exactly right. This is another argument for why silver is being seen as a commodity just as much, if not more so, than other metals. But zinc and lead mines has the most. This is telling. This is quite good. I like this. Silver mines, that means it's essentially a single source there, primary. Copper mines, 22.8. And gold mines, 15.7. Wow. There it is. Silver supply crunch. Silver supply is falling for 3 reasons. Declining mine due to low base metal prices, declining silver mine capacity, declining reserves of silver. And number 3 is in question because they're finding new stuff every day, new places, but we'll see how that does. Silver supply by source, government disposals, secondary mine production. We can see that there. Fascinating. Prolonged weakness in price provides little incentive for primary silver miners to increase output through expansions or build new mines. So annual additions of silver mine capacity are down greatly. Look at that. That is telling. Life of the mine, and there it is. But some of that, there's other factors that come into play as to why that is the case. There are fewer high-grade world-scale deposits. Silver miners who make new discoveries could prove to be the next great opportunity, and their First Majestic is talking about that as well, and where things are going. So all of these signs are pointing to a new gold to silver price cycle. What does that mean? Who knows? It could go anywhere, but it's a lot of interesting information laid out pretty well here. But the perfect storm for silver, I don't know. It just depends. It could be. It may or may not be. But I think that literally all the conditions have got to be right, just like with the weather pattern for this type of thing to take into place. But fascinating indeed. This is by Visual Capitalist presenting this from Endeavor Mines here, the second part in this series. New gold silver cycle. Post your thoughts below. I'd like to extend a multitude of gratitude to you all for watching and encourage you to please rate, share, comment, and subscribe.